Hello traders, Gary Wagner here, 12:15 in Honolulu, 6:15 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of January 2024, and this is the Weekend Review. Today's jobs report certainly ratcheted up the volatility meter. However, when you look at gold's open and closing price, you'll see that they were only a few ticks apart, forming what is called a doji. This candlestick type reflects the fact that neither the bullish or bearish faction were able to dominate the trading activity in today's session, but the highs and lows say that there was quite a fight as market participants changed their optimism about the timing of the Federal Reserve's rate cuts this year. Gold opened at $2,051.70, traded to a high of $2,071, a low of $2,030. Currently, it is fixed at $2,049.80. However, a daily chart does not tell the tale. For that, we need to look at a short-term 30-minute candlestick chart. We are looking at a 30-minute standard candlestick chart, and the release of today's jobs report occurred at 8:30. That is represented by this candle right here. It is a very, very long-legged doji in which we saw a price differential of $18.20 from the high to the low. But what is most interesting was the fact that the differential between where it opened at 8:30 and where it was fixed at 9 was only $1. During the next hour and a half, from 9 o'clock to 10:30, we would see gold rise to the high of the day at $2,071. That was a $23 plus gain, 1.46%. over these three bars, and then that would be followed by 2 hours in which gold prices corrected, moving back down $23.10. But even with the extreme volatility during the day, gold settled at $2,049.80, a few dollars below the opening price. It was the exaggerated low in the first half hour after the release of the jobs report that affected us the most, in that we did put on a trade yesterday. We went long at $2,051 yesterday and placed our stop below Wednesday's low at $2,037.50. The net loss was $13.50 per ounce, or $1,350 per COMEX contract. The reason I put the stop so tight is that after the dramatic climb in gold from these lows that came in at $1,826 up to the record high above $2,100, I thought the move that we saw the other day was an exaggerated move after the minutes came out. I was looking at it to be a one and done. I didn't expect this increased volatility today. When we look at our weekly chart, we can see that there is a solid decline, and the fib retracement that I have covers this last leg of the rally. We want to see how gold will trade at the 38.2% fib retracement. That comes in at approximately 2030, especially because we have solid technical evidence by the range that occurred back in March when gold traded to a high of 2030 and then found resistance. Therefore, if we do see gold continue to decline next week, I would look to see how it acts at 2030 as a potential entry point for a long trade. We saw volatility in silver also, trading to a high of 23.71 and a low of 22.97. We did enter a long silver trade yesterday. We bought March silver at $23.18.5. roughly in this area. Our stop was placed at $22.74.5. Silver closed above our entry price at $23.31.5. We are still effectively long with current pricing above our entry point. In terms of our strategy for our silver trade, if we continue to see movement to the upside, the first level I would look at for potential resistance is $23.60. That is based upon the 50% retracement. The data set that we use for this retracement is quite long, starting from approximately $21 and concluding at $26. I think that major resistance, if we see a rally develop in silver, will not occur till approximately $24.25. We'll effectively look to trail our stop up if silver moves in our anticipated direction. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.